Now, in business news, the euro fell to a two-decade low this Tuesday, renewing concerns about a possible recession in Europe. Investors are concerned about soaring energy prices and high inflation, fueled as well by the war in Ukraine. To discuss, our foreign editor Philip Turle is with me. And Philip, just how bad is the economic picture in Europe?
Well, we're on new territory again now, Nadia, because remember when the euro first came into being back in the beginning of 2002, it was always sort of around parity with the dollar, but that only lasted for a very short period and has always been quite a lot above the dollar. Here we've gone down to below the dollar to 0.99 to the dollar, 0.99 cents. So this is not good news for Europe, for the euro, because it's going to make trading with the US a lot more expensive for the Europeans. And I think there are two reasons for this. The first one is, of course, the shrinking Eurozone economy, which means that as a result of rising inflation, people have less money to spend. They're also worried about rising fuel costs over the next few months. All of that is not helping the economy. And the second one is to do with the Fed in the United States, the United States Federal Reserve, which is probably about to announce another hike in interest rates. It's already put them up a couple of times this year so far, 0.75% increase at the end of July. This is to reduce inflation in the US, but it's likely to push the dollar higher against other currencies. So those two events on their own have severely undermined what is happening here in Europe. And I think efforts by governments to try to redress their economies as the winter is about to move forward and come upon us.
And how closely, Philip, is all of this tied to events in Ukraine?
Well, if you look at the situation in Ukraine, of course, this is all centering around gas supplies to Europe. And there is a lot of worry, not only here in France, but also especially in Germany and other European capitals like London, for example, about just what effect these soaring energy costs are going to have on the economy. If you look at the rise in the inflation rates, plus 6.1% in July here in France, 7.5% in Germany, and 10.1% in the United Kingdom. All this has been fueled along by these concerns over rising fuel costs over the next few months. There's also a lot of uncertainty on the markets about whether people are going to be able to make ends meet, whether there's going to be enough money around, and whether this is going to lead to another increase in interest rates. And we have a leadership contest going on in the United Kingdom, so there is not really a government there which has taken control of the situation concerning fuel bills at the moment, and both sides have coming up with different arguments about what the best thing to do is, either an interest rate cut or a cut in taxes for people, or a maintaining of taxes in a bid to bring down inflation. So there's no real agreement on what is going to happen after the new Prime Minister, either Rishi Sunak or Liz Truss, is elected to office on the 5th of September next year. The only positive news for France in all of this is that France is less dependent on Russian gas than many other European countries, about 17% compared to 40% in Germany, for example. And France also does produce a lot of its own electricity through nuclear power. So the situation is slightly better in France, but still a lot of worry about just how bad these fuel bills are going to be this winter, whether that's going to stack the inflation rate even higher, which it probably will do for many countries, and whether people are going to be able to make ends meet over the winter.
Philip Turle, thank you.